Hello everyone, welcome to another episode of Market Watch. Today we will be discussing about some key developments in the global financial market and also the local markets. Well, if I can start with the global markets, people were closely watching Fed's decision on their interest rates on Wednesday, and Fed has decided to keep the rates unchanged. However, end of December and during 2018 they are expecting to increase the rates, and also according to CME Group's rate hike probability, to increase the rates in December, the probability has gone up from 50% to 75%. So, also this rate hike the Fed has decided to go ahead with the rate hikes in December and 2018 despite the concerns of their inflation, low inflation levels. Yellen has mentioned that this remained a mystery, these inflation levels, despite its monetary policy stance. Also, the Fed has confirmed that they will reverse their QE initiative, which they started during 2008 financial crisis, where they have planned to in average $10 billion a month from starting from October to reverse the QE plan. And this is approximately, they have acquired about $4.2 trillion worth of US Treasury bonds and mortgage backed securities during 2008 financial crisis. Amidst all these sentiments and developments, the US 10-year Treasury yield has increased to 2.29%, which is the highest since August 8th, and this has given and increased the attraction towards the US dollar, and it has pushed the dollar up and it has jumped to a 2-week high. And what we see is this, within these developments, I mean with the dollar rate going up, this is sentiment has put pressure on the emerging market currencies, and also Fed's confirmation on their reversal of their QE plan initiated during 2008 has also put pressure on emerging market stocks. The MSCI Emerging Market Index has performed year to date about 28% also, and amidst these conditions, I think we can see some developments in the local markets as well. Passenger.
Yeah, Shadi, if you look at the second quarter GDP numbers which released recently, or rather this particular week, which grew at a 4% rate for the second quarter. And if you look at the first quarter GDP number, which grew at a 3.8%, and again if you compare it with the same quarter in 2016, which grew at a 2.4%. So fairly decent growth was recorded in the second quarter. The growth was mainly driven through the industrial sector, which grew at a 5.2%. So definitely the construction sector was the prime contributor, grew at a 9% rate for the second quarter. And we have seen over the last few quarters, construction sector has been the major catalyst in terms of the growth. So we expect the similar trend to continue for the next few quarters as well from the construction sector perspective. And again, the manufacturing activities, which is also a prime segment in the industrial sector, which grew only at 0.2%. I think which is a bit worry, but still we expect this sector to be much more focused in terms of the next phase of the growth of the country. I think still a lot to do with this sector, and within this sector, textile manufacturing has only seen a 2.5% growth for the second quarter, and the services sector also contributed positively around 4.5% to the second quarter GDP growth, backed by mainly the financial services grew at a 16%, and the telecommunications sector also contributed 12.4%, but wholesale and retail activities which was a bit slowed but growing at a positive 4% rate. Agricultural sector, which we have seen the negative growth for the last 6 quarters, continuing in this quarter as well, at a negative 2.9% growth. But within this particular segment, tea and rubber has seen some positive note. If you look at the tea and rubber sector growth, which recorded around 9% and 10% respectively for the second quarter, but which we have seen continuous drop over the last 3 years. That is mainly because of the positive or other uptrend in prices in the Colombo auction. So if you look at the GDP as a whole for the first half of the year, which has seen a sort of a 3.9% growth for the first half. And again, the inflation numbers also released for the August, which have seen around 7.9% inflation for the August, which was at 6.3% in July. So it's a bit of a uptrend. Food category was a major contributor to inflation, which was mainly driven through some of the increases in some of the food products like onions, some fruits, and some coconuts and potatoes. At the same time, the non-food category also contributed, such as healthcare sort of expenses, tobacco, household equipments, maintenance, transport, and clothing and footwear. We have seen sort of a pressure to the inflation, and again the water, electricity and gas hasn't seen a much of impact on the inflation for the particular August month. So if you look at the core inflation, which excludes the more volatile item from the equation, has also seen a sort of a growth or the increase from 4.2% in July to 4.8% in August. So basically the inflation is a bit of a uptrend, but overall I expect for the next few quarter or other few months also the pressure is there from the supply side shocks, but still may maintain at around 6% to 7% range, I would say. And from the interest rates point of view, if you look at the excess liquidity situation in the system, which is continuously rising right now. If you look at the numbers, earlier it was around 50 billion negative, but now it's 40 billion positive in the excess liquidity situation. And again, the central banks holding in treasury bills and bonds has also seen a steep drop down from the last May onwards. If you look at the numbers, last May they had around 250 billion worth of treasury stocks, which has now come down to 59 billion, I think, which is a considerable drop. So which indicates there's a sort of a relaxation in terms of the interest rate situation in the domestic environment, and which is really reflected if you look at the 1-year treasury bill rate also now dropped at 9.1%. If you look at the 2 months back, which was hovering at 11.1%, so nearly or rather nearly 2% drop in the 1-year treasury bill rate also, which is followed by the AWPLR also, which has seen a 86 basis point decrease or rather reduction over the last 2 months. So that's the interest rate situation, and the currency also bit of a or rather fairly stable right now. Maybe due to Hambantota port deal was there, and some of the dollar was bit weakening in the global context, so that's for the major reasoning. But now the context is going to be bit changed with the now the Fed's movement, so that has to be closely watched. But fairly, I expect some I don't expect much steeper depreciation coming into play for the next 2-3 months also. Next Tuesday is the monetary policy meeting there, so I don't expect much surprising results or the conclusion from the monetary policy point of view. I firmly expect that the rates to be unchanged for the this particular month also from the policy rate angle. Yeah, Shadi, now if you look at the stock market context, how do you see what kind of a
Yes, Pasindu, if I can brief Colombo Stock Exchange performance, year to date performance stands at 3.4%, whereas in June it was around 8.3%. However, this we have seen a drop down in the overall performance of the market, mainly because of the speculation of the inland revenue bill, and together where there was a speculation where they will introduce a tax on trading in addition to the levy. But however, those speculations are now settled, and we can see now the market is having a support at 6,360 levels, which was a technical support we expected. If I can also give you a quick view on the technical side, where the market is back to its neutral territory based on daily RSI levels, which was earlier around early September. The market was at its oversold territory with its strong support 6,360, which is also the 200-day moving average levels closer to that area. So market maintained that support. So we feel key supports to the market would be going forward 6,360 and next 6,250. Those are the key supports for the market, and also the key resistance for the stock index is 6,590 levels, and then 6,677, which is another major resistance for the overall index. So this is the current technical outlook on the market. However, also we have noticed during the first half the foreign inflow is around 27 billion rupees, and now I think with the Haley's deal, Haley's Singer deal, there is a net there is a big outflow of 10 billion
Shadi,
rupees.
it was a very
if you
exciting,
can,
very exciting deal happened in the last week. Haley's PLC acquired 61% stake in Singer Sri Lanka as a consumer durable company. The seller was, the Retail Holdings Sri Lanka, a subsidiary of Hong Kong-based Singer Asia. So they were the seller of this particular deal. The price was around, or rather the consideration was around 10.9 billion, which is I think largest acquisition in listed space so far. So the share was acquired at 47 rupees per share. So the Haley's PLC will come up with the mandatory offer during the next few weeks. Also, if you look at the Singer Asia, I think they have liquidated their stakes in Pakistan and Thailand recently, or rather last 2 years. So if you look at this is the third one, right? And they have the stake in the India and the Bangladesh also. So what next? I think that's what we need to look at it. At the same time, I think we have seen some volatilities in the market over the last few weeks rather, due to some of the factors like Indian revenue bill that got now confirmed, and the investor should know now there's no negative fact in terms of the stock market, in terms of the taxation.
Yes.
So only the existing transaction levies continued, no more taxes being imposed. I think that's a good factor. I think with that, of course, majority of the ambiguity has been eroded, but still some of the sentiment hasn't not been picked up due to, I think, sort of a political uncertainties where we can now see. But I would say after the November, I think after the budget also come into play, there would be a sort of sentiment to be created, because still the foreigners are in the buying side. I think still the Colombo Bourse is in a buyer's market, I would say.
That's right. Exactly, Pasindu. Very interesting developments we can see. I mean, also especially we have to keep in mind the moves from the US side, where, as we discussed, because of their reversal on their QE plan, which they started during 2008, and this will have an impact on emerging market stocks and the dollar strengthening on the emerging market currencies. So we'll see how the markets are performing over the next couple of weeks. And for viewers, we hope to see you with another exciting episode. Until then, take care.